Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and just wanted to give you our market update for the week. Hope everybody's doing well, and wanted to first of all we'll start with the days on market and kind of the stats, and kind of give you some other cool things that are happening. So, 37 days is the average closed on market. Less than 1 month supply still, or 0.81 month supply. Absorption rate is 124.11%. Everything's getting gobbled up pretty well. The average list price is 780,000 and some change. Average sales price. Okay, so there's list price, there's average sales price. Okay, big difference. That's 564,786. Now, I remember when 500,000 used to be our luxury market just, a couple of years ago. So big difference in our market right now. List price to sales price ratio percentage is 101.24. So, it's over 100%. So that means, on average, homes are going for more than what they're asking for. Now, we use what's called a Cromford report. I've told you guys that many times, and we use what's called their CMI, the Cromford Market Index. And in there, it shows that there might be, might be a slight cooling trend. Okay. And I know everybody's waiting for a crash where prices are down to 200,000. I would not expect that to pretty much ever happen in this market. Okay, I guess anything's possible, but I would expect that at some point this will level off to normal levels. What's a normal level of appreciation in our market? Well, Phoenix market's always been a seller's market, except for a couple of short periods, according to the Cromford report, which are the gurus in town, and looking at our MLS. So our normal average would probably be around 5 to 6% appreciation, 5, 6, maybe 7. We see that we might have a little bit of a cooling trend. So let's take a look at what notes I've got here on this. So I just kind of give you an idea and a little background here. June of 2019, the number of active listings had, now compared to last year has actually gone up. And in 2019, that was the last time it had happened up until now. So we see that we've actually got a number of active listings on a plus side, so to speak. Okay, now they're getting gobbled up really fast, but the good news is we're seeing that influx of active property. So this time last year, in other words, the trend is, the first time since 2019 that we've seen that trend of more active properties going up, a higher number of active properties going up. So the appreciation continues to go up. The payments, just kind of give you an idea on this too, the payments that everybody is paying now compared to where we were before all this craziness happened in our market. Appreciation continues to go up. It's increased by 40% in the last year, 40%. Okay, that's due to interest rates going up and also property value and appreciation going up by 30%. So coming into the market now as a new home buyer, that's what you're looking at, okay, without any equity. So affordability on homes has become much harder to come by. Now what used to be the $200,000 to $300,000 range, kind of entry level, is now, 4 to 5, and on up to 800,000, 400 to 800,000 is more of an entry level for our market, where it used to be, 2 to 3, maybe 400,000. So how much longer is this going to take to level off? Nobody knows yet. We have seen since December a 1.9% appreciation. So that's good news. If you bought a home in December, you've got an appreciation of 1.9%. A balanced CMI index would be right at 100, or between 90 to 110 on the CMI index. So 100 rate would be smack dab in the middle of that index. This week, We are at 474.6. So anything over 110 is a seller's market. Anything below 90 is a buyer's market. Anything kind of in the middle of the 90 to 110 is a balanced market, buyer, seller, pretty on level field. So it's still increasing, but not as much as in past weeks. So, since the beginning of the year. So that's good. We've seen a little bit of a increase, but not as much as before. So it's something, okay? Give you some hope. And the demand index itself, beginning of the month was 122. It's now at 120.7. I'm sure some of that may be some buyers, are, getting frustrated with, coming up on these offers and stuff. Now, and not getting them. And we're seeing people waive all contingencies. And sometimes even when they waive all contingencies, even doing non-refundable earnest deposits and things like that, sometimes they're still getting beat out. So, but again, this is maybe could be a trend. We'll see. It's too early to tell. But again, we're not looking like, this is going to slip down into prices dropping back or anything. It would just be like, hopefully, eventually a leveling off a little bit to more of a normal market appreciation. Normal, not a crash, normal. Okay. Again, big difference between back then during the crash and now is a lot of regulation on people's loans. Before you could fog a mirror and get a loan and buy 3 houses. Plus the inventory was much different than it is now. So just a couple of things to leave you with there on that. The supply index from the Crawford report shows us we're at 25.4%. Or 25.4. So that's a 75% below normal on supply. Okay. And then people always ask about new homes, and we do have new home options. We do even have quick move-in new home options in certain parts of town or places you can go without a waiting list in town and outside of town, but quick move-ins outside of town. What's outside of town? Could be Buckeye, could be Maricopa, could be Casa Grande, maybe Santan, Queen Creek. There may be some quick move-ins we could get you into, but other than that, in town, you're not going to find much in the way of new build quick move-ins. But here are some things to think about and leave you with new builds. And because there's been some articles out there that I think are a little bit misleading in that we're overdeveloping, and we're going to overbuild here and cause some problems that way. Well, in 2009, 2010-ish, right in that, we're pulling about 1,000 permits per quarter. Right now, we're pulling for new builds. Now we're seeing 9,500 permits per quarter on average being pulled. In 1999, we had 1,100 permits, that were pulled per quarter. And in 2004, we had 1,600 per quarter. So, some articles are saying, but we're going to be overextending ourselves. Well, we're not really overextending ourselves because really the numbers back in the 2009 and 2010 were quite low. Okay. They were quite low. And why were they low? Well, there was a issue with what's called a crash. So, at the time there were a lot of people who weren't, ready to buy yet because of that crash. And they were having issues with, foreclosures, not enough equity, all those sorts of things. So in any event, if you have any other questions, want to make any comments, on our YouTube page or back here by email, if you're getting this by email or on one of our social media pages, please feel free to ask questions, make comments, and follow us on all our social media. If you guys have any questions beyond that, feel free to reach out to us. We'd love to be able to help you with any of your home buying, home selling, refinance, cash out refi needs. My wife, Cynthia, is a licensed loan officer with a mortgage broker here in Arizona and now licensed in Florida also. So if you guys need anything at all, reach out to us. We'd love to be able to help you out. Thanks a lot. We'll see you next time. Check us out also at McCulloughHomes.com and McCulloughGroup.com. And you can always reach us at 480-788-8569. Call or text us there. Thanks a lot. We'll talk to you soon.